popular entrepreneur Hamilton Ndlovu, who's been described, quite frankly, as a tenderpreneur, a South African young gentleman who has been probed following a PPE tender fraud, where he unlawfully scored a 172 million rand contract from the National Health Laboratory Services, and this was uncovered following his posting of luxury fleet of vehicles on social media, and has now been ordered following these investigations to repay 158 million rand. And this begs the question, right? Because so many of us are living our best lives on social media. We actively encourage it, right? To reward yourself with the purchases that you make or the assets that you look to acquire, certify you, audit you, that it is all in order, that you are a civil citizen who is paying your taxes and abiding by the law. To help us unpack this further, we join on the line by Jashwin Baijoo, legal manager at Tax Consulting SA. Jashwin, thank you for your time and welcome to the show.
Good evening, Gugu, and thank you for having me on the show.
Thanks for joining us. I know that we're moving into tax filing season, and for many South Africans, we tend to feel like it's more admin, but thankfully with professionals like yourselves, we get by with it quite easily. But most South Africans have this fundamental fear of being chosen for an audit by SARS. But before we get there, help us understand what the process is and what would actually raise potential red flags before the Revenue Service actually says, hold on, Gugu, we want to look a little bit deeper into your financial affairs.
All right, so as a starting point, we must first understand what a lifestyle audit is. And a bit of history on lifestyle audits. It's not something new. I mean, it's come to the forefront in the last year or two. But SARS has been using lifestyle audits on private individuals, typically government employees, from as far back as 2007, but very much from the shadows. Now, when it comes to the selection basis, this was the means of an individual in contrast to their standard of living, and was typically conducted in individuals where their lifestyle was so far beyond their means that there was the imminent suspicion of fraud or corruption. That was going back decades. Now, if we fast forward and we look at current affairs, where SARS has introduced something called the High Net Worth Unit, and Commissioner Kieswetter has, in the budget speech this year and last year's National Tax Indaba, emphasized SARS's position as an organization to focus on collecting the lowest hanging fruit. Open to interpretation, you would think. But what we've seen is SARS drastically stepping up not only their audit powers, but their access to information, as well as collection measures against non-compliant taxpayers.
Got you. And just to say we put it clearly, this is not SARS trying to spy on you, right? They're fully within their legal ambit to actually do so.
So that's the thing. There is nothing prohibiting SARS. And in light of more recent developments where SARS has upgraded their artificial intelligence mechanisms and also made full use of the automatic exchange of information with varying jurisdictions. And this is evident in the media if you look at the recent case of Airbnb, where SARS was well within their rights to actually request information on South African hosts using the Airbnb platform, even though Airbnb is headquartered in Ireland.
And Ireland is actually very relaxed on its tax regulations, if I'm not mistaken.
That's correct, because historically, Ireland was referred to as a tax haven.
Yes.
It is no longer referred to as a tax haven. It's now a tax optimal jurisdiction. However, that being said, this is why many multinational companies choose to headquarter themselves in Ireland, thinking to benefit from that favorable tax treatment. But there are mechanisms in place. Another one is the dual audit, where two jurisdictions may conduct a joint audit on a taxpayer, such as an Airbnb or a high net worth individual that has vested interest in, say, both Guernsey and South Africa.
So key lessons that we're learning there, just because the headquarters of the company that you might be affiliated with or invested with or be a partner to doesn't necessarily mean that they would escape from the far-reaching hands of the law and revenue service of South Africa. And as you say, sometimes two jurisdictions can actually investigate high net worth individuals at the same time. Okay, so I've got you clearly on that one, Jashwin. What I'm also quite keen to learn, and I guess perhaps referring to the Hamilton and Ndlovu case, where he really grew to prominence because of the posts on social media. Does that play a role at all in terms of how one's wealth is exposed, investigated, or even uncovered?
So with reference to that specific aspect, I mean, honestly, if you are earning, if I'm earning 50,000 rands a month and I go and post that I've purchased 3 luxury cars in the last year, each of them exceeding 2 to 3 million in individual value, I would say I would be making SARS's job a lot easier for them, actually.
True, because you're actually exposing that. And I think that also speaks to the factor that you mentioned, is that there needs to be a substantial difference between your means of income and, of course, the lifestyle that you live in, which would then obviously raise a lot of red flags.
That is absolutely correct, because it must be borne in mind. And again, this was highlighted in the budget speech earlier this year. But SARS has now requested that all provisional taxpayers with assets above 50 million be required to declare specified assets and liabilities at market value in their 2023 tax return, which means SARS will then have a full register of all of those individuals who can be living that very, very lavish luxury lifestyle. And if you're not on that register, questions are going to be raised and you're going to be red flagged immediately.
What happens for those who choose to hide some assets or become very creative with their accounting of regarding their earnings?
So it's historically, we have seen that there's a complex loop structure, or there's a shell company offshore. There's 10 policies held in the Cayman Islands. You've got a bank account in Guernsey, and that's all good and well. But ultimately what happens is, when that offshore undeclared asset is discovered, which will happen at some stage. It could be this year, it could be in 10 years' time. But at that stage, the sanctions and penalties imposed on those non-compliant taxpayers would not be at that point in 10 years' time. It would have retroactive effect for the period of non-compliance, which means 10 years down the line, you could sit with a tax bill of 50 million.
Goodness. So just because you hit it a couple of years ago and you thought it might go away, it actually doesn't go away.
That is absolutely correct. What we did see was, I think it was about October 2020, where notices were issued to supposed high net worth individuals before the unit itself as SARS was formalized, asking for a complete disclosure of offshore assets. It did not speak to specified assets, no. It was very broad. SARS cast the net as wide as possible to see what would be caught. Now with the automatic exchange of information, they don't need to do that anymore. They could ask any revenue authority, listen guys, this is the taxpayer, this is their details, this is their ID number. Can you just check to see what assets are in your jurisdiction? And that authority will willingly provide that information to SARS. So SARS may proceed with an audit, a verification, or even a criminal investigation right here in South Africa. But this does not pertain only to South Africans. It also pertains to South African expatriates that have either left, they're on a bit of a rotation, or they have financially immigrated from the country, but retain some form of interest in South Africa, whether it's a rental property or a policy that needs to pay out or some sort of investment.
Got you. And I think that's so important for us to remember that don't think and assume that, oh, well, I know someone there who will hide and protect my data and information. Ultimately, it's a legal requirement for them to render that information up to SARS, should it be required for further investigation. Another thing... 100%. Definitely. Another theme that I'm quite intrigued by, Jashwin, and perhaps you can also help us with this, because we're well aware that evasion of tax is illegal, but there is avoidance, which is the legal route. And for individuals, I guess, for those who might have 50 million rands worth in assets, or even those with slightly lower, how do you make sure that you're able to find effective legal ways of avoiding tax versus non-disclosure, which could just come back to hurt you in the end?
Look, so I'll just put it out there that non-disclosure of specified assets, any income, additional income, be it employment income or a lump sum benefit, non-disclosure of that is not going to go down well with SARS. That's point one, just to put it out there for all taxpayers. However, when it comes to avoidance and evasion, there's a very fine line. Now, we would rather not look at avoidance because that is also contrary to an extent. What we would rather look at is tax planning. And this is something you do not when you are already knee-deep in it. No, you do this at the outset. It's a way to structure your affairs in the most tax-efficient manner, be it through a corporate structure in the event of a company, or a trust, some sort of policy, a global endowment in the case of an individual. And ultimately what that serves to do is it optimizes your tax efficiencies. So as an example, if you're an expatriate and you're between South Africa and, let's say, the DRC.
Yes.
What would optimize your tax planning is, one, look at your time spent out of the country. You may be able to claim the 1.25 exemption on your income. Further to that, if you're registered in any of the foreign jurisdictions and paying tax on that side as well as the South African side, you can then look at foreign tax credits, which result in a reduced tax on the South African side with SARS because it works as an offset mechanism. Either you pay the deficit or SARS would refund you for any surplus paid on the other side.
Got you. And I think that's important for us to note, as you say, effectively starting off on the right track regarding the tax planning and then working your way around there. But Jashwin, I guess to bring it closer to home, many South Africans might have 50 million rands worth of assets, and others might not. That still might be the goal, right, that they're hoping to accomplish. Should they have any sense of anxiety then when it comes to lifestyle audits or, as you say, non-disclosures? And I guess should they be... Fearful is a strong word because what we're trying to do is to empower people, but should they be concerned, but at the same time still responsible enough to make sure that they do comply?
Look, so if a taxpayer is venturing into that realm where they have to second guess a transaction or an investment and actually put consideration and brain power into, listen, is it avoidance, is it evasion? Chances are you're already non-compliant. But that being said, there are a number of relief mechanisms and remedies available to these taxpayers. So as an example, if a taxpayer is wishing to rectify any sort of historical non-compliance, and this goes to that example I gave you, if they catch you 10 years down the line, if they're looking to remedy something historical, then they would be looking at a voluntary disclosure of information to SARS, which is known as a VDP application. This would ensure current compliance records remain unblemished, and that's from a legal standpoint. In the event that it's more current and they're not able to afford this liability, let's say over the last 5 years it's racked up to 4 million, and that is just completely beyond the affordability of the taxpayer. It's at that stage they would look at a compromise of tax debt as one solution, which is a mechanism that aids both individuals and corporates to reduce their tax liability by means of signing a compromise agreement with SARS. It serves the purpose of getting rid of interest and penalties which may have accrued over the last 5, 10 years, whatever the case may be, and working out a feasible settlement amount of the capital portion.
Gotcha.
There is also the option of a payment arrangement where the taxpayer pays monthly installments to SARS. So if taxpayers are found in this situation, it's not necessarily the end of the road, but rather it's a time to be proactive, engage a tax specialist or a tax attorney, and take the necessary steps to protect yourself and possibly even your family from paying for the sins of your luxurious lifestyle.
Got you on that one, because that would definitely just erode wealth, unfortunately, which is not what we're looking for. But as you mentioned, guidelines, it's all about disclosure. That's a big message that we've been hearing this evening on the show in terms of making sure that you follow through with the necessary legal processes, because shortchanging the taxman will only shortchange yourself with penalties and interest and potential jail time in the end. Jashwin, thank you so much for your time this evening. Really appreciate your insight.
Thank you, Google.